Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our latest offering, What's Hot, a show that focuses on the biggest buzz on the day straight. As we close in on the year 2025, it's important to look back and find out who were India's biggest wealth creators. So the top 7 conglomerates, including the biggest ones, the Tata Group, the Reliance Group, the HDFC Group, the Bharti Group, the Bajaj Group, Adani Group, as well as ICICI Group, how did they perform in upping the investors' portfolios, giving them handsome returns or not? We are going to be decoding where exactly investors made money. So this is what we are going to be discussing in the first part of our show today. Later on, we will also focus on which are the top stocks that are coming on the radar of top brokerage houses, including Lenskart from the eye care space. We also have the defense space back in focus with the DAC clearing that 80,000 odd crore rupees acquisition proposal yesterday. So we are going to be focusing on all of that and finding out which are the themes that you're going to be focusing on for 2026. Let's now welcome our guest on board. Gaurav Sharma is now joining in. He's back with us on What's Hot. Warm welcome to you. Thank you so much for taking the time out and many greetings to you for the upcoming new year, as well as we hope that this year turns out to be a great one for you, for your loved ones, as well as all your professional friends at Globe as well. So here's wishing from the entire team of Business Today Television a fabulous year ahead, Gaurav.
Thank you so much, Sakshi. Season greetings to you, to your entire team, and to our viewers as well.
Thank you so much, Gaurav. So let's start off by looking back at the biggest conglomerates of India and how they performed in 2025. So together, all of these 7 groups that we are talking about, the Tatas, the Reliance, HDFC, Bharti, Bajaj, Adani, ICICI Group, they together added 10 lakh crore rupees to their market cap in the year 2025. And their combined market capitalization today stands at 122 lakh crore rupees, and this equals 60% of the Nifty market cap that today stands at 207 lakh crore rupees. And that's why it is important to focus on how did each of these groups really perform. Did investors truly make money in the year 2025 there? So let's talk about the biggest group, that's the Reliance Group, because Reliance Industries is the biggest listed stock market, stock right now that we have in the domestic exchanges. It is India's largest wealth creator. It has topped the charts there. The market capitalization was up by 4.6 lakh crore rupees in calendar year 2025. The group market capitalization now stands at 23.44 lakh crores as well. Reliance Industries stock surged by 30% during this year, accounting for total of 48% of the wealth that was created for the Nifty stocks and the conglomerate related stocks, how they performed and improved the investors' portfolio as well. So let's talk about Reliance. Gaurav, what are the factors that worked in favor for Reliance Industries? Even if it was a slow start, the first half was not too much of a move on Reliance Industries at all. In fact, somewhere in the middle of the year, we were also talking about how this could be another year where it could be probably no return for Reliance Industries. But soon after, things changed for the better. And again, we have seen Reliance Industries perform. So what worked in favor for Reliance Industries and what do you expect for 2026?
Yes, Saishri, you've rightly pointed out the first stock we are discussing, Reliance Industries, the biggest conglomerate, nearly 21 lakh crores of market capitalization. And when that size of a stock moves by about 27, 28 or 30 percentage points in a year, I think that have a meaningful and sizable impact on the overall markets, because this is actually a mammoth size market cap we are talking about. Initially, yes, there was a lesser type of a participation in the first half. When I'm talking about the calendar year here, lesser participation that turned out actually resulted in a breakout coming in from this stock. Valuation fronts, they are very much reasonably valued company. Initially, there was absolutely no participation, rather a negative move coming in from the Geo Finance as well, which is part of Reliance conglomerate only. And, things coming out that a demerger is pretty much on cards. The retail business will be, demerged from this company. The telecom business will be demerged. Now, when we talk about telecom company, it is very important to notice the growing ARPU figures for Jio. They are not lagging much behind Bharti Airtel now, and equally not in terms of the customers added per month figures that are released by TRI. So I think all in all, this particular group has done really well, and I think Jio has played a vital role in the growth story of Reliance Industries on the whole.
Okay, fair point. Let's actually talk about the Bharti Group also, which ranks second. It's important to talk about that as well because the group added 3.5 lakh crore rupees to investors' wealth in 2025. The group market capitalization also rose to 14.6 lakh crores. Strong gains that were led by the telecom business. They contributed 36% of the total wealth creation as well. Let's talk about Bharti Airtel also as to what are the opportunities and the Bharti Group as a whole as to what will be the opportunities to look forward to in 2026 and which are the areas on the stocks that you should be focused on even in the new year. How would you look at the Bharti Group then with the opportunities that you just shared in the telecom space?
Sakshi, I think I've been biased to the Bharti Airtel space all throughout the year now. I've been hunting for dips in this particular stocks to add more to recommend our clients, and it has actually paid up pretty well for us. It was not long back when the ARPU, average revenue per user for the Bharti Airtel was scaling somewhere around 120, 140. Currently, it is at 250 plus levels. I think this is quite a jump for the company. Now, what we are seeing is an upward revision in telecom rates. The penetration is still reasonable and much more to go. Therefore, India being a country with highest level of internet users, still the tariffs are reasonably priced. So there is huge scope for an upward movement, and I think this will actually pave way for the further growth. Apart from this, if we have to play and on a complete telecom story, I think it is only Bharti Airtel as of now available from the entire listed stock space, as Jio is yet to be listed separately. So therefore, this is a niche category, and I think a 30% growth is pretty much reasonable from this stock. This is not at all a bad number. Apart from this, we should also look at its previous year's performance. It was trading at just about what I think 450 odd levels in 2019 2020, and currently it is trading 2000 plus. So this is the kind of growth story. I think the number speaks for itself.
Absolutely. Let's talk about Adani Group now. 1.1 lakh crore rupees got added to the group entirely, and the group market cap now stands at 14 lakh crore rupees as well. The Adani Group definitely came into news flow yet again just in the last part of December after having seen the Navi Mumbai airport get launched. A lot of expansion plans are now underway for the group as well. But even when we look at from the Hindenburg saga that really led to a sharp correction in the entire group. It's been almost 3 years now. So, from that time till now, about 33 deals have been signed by Adani Group and about 80,000 odd crore rupees of deals have also been signed there. So, the expansion pedal is going on at this point in time. The fundraise has been going on at this point as well. So, how should one go about Adani Group looking at from here in 2026? Are there enough opportunities there? Which are the top stocks that you believe are the first ones to give handsome returns in 2026?
Yes. When we talk about the Indian stock markets, I think we cannot shy away from the Adani Group. They are everywhere. I think each and every sector, it is hard to find, where they are not placed at. But there is one important thing we have to keep in mind. In most of their companies, the gestation period is high. Whether it is ports business, may it be airport business, may it be exploration business, may it be power business, renewable energy, whatnot. The gestation period is high. So whenever we look at this, we have to have a view of at least 2 to 3 years. Now, coming on to, you pointed out toward the Hindenburg saga, this the entire group was, deeply beaten down and investor sentiments were dampened. And I think that had a greater impact on the recovery path. It is always slow. What we have seen in past 20 years, 25 years now, the recovery is always slow whenever a damage is done. So that's what exactly a sentiment building is going on. From my favorite picks, as far as I am concerned, Adani Ports remain my favorite pick. It is a part of the India growth story. It is a part of the railway network that we are seeing. It is a part of the entire export oriented business, the Atmanirbhar Bharat scheme. I think this stock has a lot more potential to actually render to the investors that what it has done in the past. So still, I think it is very much on a lower valuation. Keeping in mind a 2 years or a 3 years perspective, I think this stock is fairly valued and can be considered. I think it's a must to have a stock in a portfolio.
Okay, fair point. Let's now talk about the other groups. Bajaj Group also added 2.6 lakh crore rupees to its market cap, and the other group was HDFC Group that together added 2.2 lakh crore rupees to its market cap as well. Remember, this year was also when HDFC Bank itself had HDB Financial's IPO also coming in there, and that also brought a lot of attention to the group. So let's talk about these two groups separately now. Bajaj Group first, of course, with the auto as the key focus there, and of course the finance twins also leading with the front. How are you looking at the opportunities within the Bajaj Group going forward, sir?
Sakshi, all throughout the year, I'm specifically talking about the two-wheeler auto space now. We have been very much bullish on the Hero MotoCorp and negating Bajaj Auto for many reasons. But of late, I've been closely tracking their monthly sales figures. The kind of export numbers this company is reporting, which is phenomenal. And I think if that kind of momentum continues due to the currency depreciation, Indian currency depreciation, I think a good amount of value should be seen in Bajaj Auto going forward. It has consolidated all throughout the year, even after posting if not very good, but reasonable set of numbers. Therefore, whenever the breakout comes out above 95 odd levels, I think this stock will run up towards 10,500, 11,000 zones really quickly. Now, there is when we talk about Bajaj Group, we cannot leave behind the Bajaj Finance and the FinServ as well. Bajaj Finance, we remain really constructive on this space because they fall into the NBFC category, India's largest NBFC, and going forward with the lowering interest rates, I think they have a lot more to offer. Is another big news from the Bajaj FinServ space that they have acquired the entire stake from the Allianz Group also. So the earlier Bajaj Allianz Life Insurance is now Bajaj Life Insurance. They hold the entire stake by themselves. So this
Yeah.
is also big news, which will have a larger impact in years to come now with India's growing population and after COVID, the rising importance of having a life insurance and health insurance. I think this is a way to go.
Okay, fair point. What about the HDFC Group and the new entrant HDB Financial there? How are we looking at that for 2026?
Again, HDFC Bank. I think the number speaks for itself. From the private sector banking pack, the largest space. This remains our favorite pick, and we continue to have a bullish view on this stock going forward for 2026 as well. For this year, 2025, yes, the returns have not been that great, but I think it will perform better than what it has. Performed in this year. HDB Financials, we are yet to have a coverage report on this, so I'm afraid I won't be able to share my views on that. But as far as HDFC Bank is concerned, we are having a very constructive view on it.
Okay, got that. Let me actually now talk about the Tata Group. The Tata Group emerged as a wealth destroyer in 2025. Why do I say that? Because TCS alone lost 3 lakh crores in market cap. In fact, the IT sector was hit by slower growth, the AI-led disruption, and all the uncertainties that we constantly saw on the trade front as far as US-India is concerned. Remember, apart from this, we've seen Trent, Tata Elxsi, Voltas, Tata Technologies. All of these stocks have been down anywhere between 20 to 40% in 2025. Majority of Tata stocks have ended the year or are close to ending the year in a negative territory as well. And that's how you see 39% of the value lost for Trent. Tata Elxsi down 23.6%, and so much and so forth. Let's try and understand what really went wrong, and is 2026 going to be a year when most of these stocks will have an opportunity to bounce back, and therefore should you be looking at any of these stocks to probably add at dips as well? Gaurav, how would you look at explaining this?
I think the first statement that you came out with, with reference to Tata Group, is not something that we hear or see more often. Tata Group's underperformance is pretty much unlikely, but 2025, that is what it was. Most of the Tata stocks underperformed. They did not added value to investors. They had a dent on the portfolios, larger portfolios. The Tata Motors, which was one among the best performers of the previous years, actually could not perform even after being demerged as two separate entities. Tata TCS, again, yes, the IT sector was largely hit by tariffs and uncertainties, could not perform. Trend is continuously underperforming, but one stock which has completely set the stage for the Tata Group specifically, that is Tata Steel, because the metal pack has actually
Yes.
performed exceptionally well. 25% growth was recorded in this year as far as Tata Steel is concerned. Going forward also, this growth is likely to continue because metals nowhere seem stopping here, and the prices are likely to mount going forward as well. As far as TCS is concerned, the story will be a lot different what we have seen in 2025 or 2026. Recovery is pretty much likely. Constant currency revenue, depreciating rupee will add value to their will be a blessings for these IT companies going forward. They have reported good guidance. We expect the commercial vehicle segment to perform exceptionally well. They are doing reasonably well in the electric vehicle space. So I think by the middle of 2026, even the passenger vehicle segment should also start performing. Therefore, I think it is actually, we just need to be a little stock specific as far as Tata Group is concerned, but it is likely to perform much better than what it has performed in 2025.
Absolutely. So that's the Tata Group for you. So there you have it, viewers. We have now discussed all the 7 big conglomerates and found out where investors truly made money and where investors lost money. Also, where could be future opportunities to track within these biggest wealth creators as far as the biggest conglomerates are concerned for 2026 as well. I hope this has given you enough and more insight as to how to approach these big groups. Let's now talk about the top stocks that are on top brokerage houses' radar today. Talking about Lenskart first. Why is this in focus today? MK Group has come out with a broking report, and they have said that they have initiated a buy on the stock and a target price of 525 on Lenskart as well. Why do they believe that it has still potential to move up from where it is currently? They say Lenskart is a category leader in the $9 billion eyewear market. The industry CAGR growth is 13%. The GST cuts and the fashion tailwinds are going to be supporting the move going forward from here. It has best-in-class unit economics, a sub-1 year payback as well, and it also has strong operationalities as far as $40 billion of net cash runway that is going to be support the growth going forward. Let's talk about Lenskart. Gaurav, I want you to help all our viewers understand what really happened here, and how should they be understanding. There was so much of confusion around Lenskart when the IPO was to come. We have discussed this also before as well. So before the IPO hit the street, there was enough and more debate on whether Lenskart is coming at a fair value or does not deserve to be listed at the valuation that they were commanding. Of course, there was knee-jerk reaction, but soon after, Lenskart shares started to pull up again. And so much so that over the last couple of months, if we look at the last 2 months or 3 months chart from wherever it got listed, let's see the kind of move that we have seen. It has moved about 14% odd, especially from about November onwards. We have seen that move come in back to Lenskart. So much so that now brokerage houses are penciling in even higher targets, giving the stock even higher valuation from where it is currently and what it was commanding earlier. So it gets very confusing for all the investors to really understand what to understand where. How would you explain to them what's happening with Lenskart?
We'll break this into some parts and try to, get it as simply as possible. First, and one of the most important thing, in a country of about 1.3 billion people, and with larger people and more younger people having eyesight related issues, Lenskart is the only eyewear play, a solely eyewear play with good penetration, now heading towards tier 2, vastly towards tier 2 cities as well. Now having listed, they have good money in hand to actually expand very rapidly. Of late, what we have seen in the past decade or so, the eyewear market has been linked to the fashion wear as well. So previously, what used to happen 20, 25 years back, it was only the people with some eyesight related issues used to go to, optical shops. Now what is happening? It is actually becoming a fashion type of a thing, accessories. People are buying more of these and they are changing and replacing their eyewears very frequently. This adds value and more customer base and added sales to this particular segment. Now talking about the numbers, the financials, I think they clearly outshine. Simply look at the quarterly numbers, look at the yearly sales figures. They are mounting like anything. 2021, 900 crore sales. 2022, 1500 crores. 2023, it was 3700 plus. 24, it was 5400 plus. 25 is was 6,600 plus. So this is the kind of phenomenal growth that we are seeing from this stock. And, this company is now into profits as well. So brokerages coming out with higher targets, I think it is pretty much obvious with sales mounting, with the steady operating profit margins, rather rising OPMs, the profits are, they're likely to remain on the higher side only. So the higher price targets is pretty much warranted. Nothing surprising.
Okay, fair point. I hope this has given enough and more understanding to our viewers who've been confused about how to read into Lenskart and the opportunities ahead. Should you dip in or not dip in your feet right there yet, in case you didn't get an opportunity in the IPO time. Let's now talk about some of the other stocks. In fact, it's moved to the highest spot of the day. Look at the stock. It's moved to the top point as we spoke, and as Gaurav was explaining, it's 2.86% higher at the day's high at 465. So it's moved up sharply, and Gaurav, people are listening to and also investing at the same time. So there you have it. Let's also talk about some of the other key areas. Let's talk about defense. That's the space that has started to buzz over the last 1 week, 2 weeks, yet again, an erstwhile favorite of investors. Now, there's a lot of buzz also on the defense space, especially after the DSE has cleared that near 80,000 crore rupees odd approval, nearly 2 times the FY26 capex that was planned. The order inflow has de-risked for the next 2 to 4 years as well. And of course, people are looking at some of the opportunities that could bring up for BEL, HAL, BDL. These are the companies that could be in focus because of the kind of missiles, the equipments that have been cleared up for emergencies for armed forces, for Navy, for Air Force as well. And these are the companies that make those equipments as well. Let's talk about the opportunities on the defense space for 2026. For somebody, of course, who had heavily invested in defense and has been carrying on, they don't have anything to fear at this point in time, because every time we discuss defense, it always comes out as a long-term theme, 5, 10 years, or in case you have that kind of a patience, then we always say that defense will have a lot to offer. Now, in case those investors who are looking to play the defense theme for, say, next 1 year, what would you advise them?
Sakshi rightly pointed out, defense has always been a play of a longer term business, just like green energy. It is very much capital intensive. It is very much nowadays tech savvy. It involves a lot of technology transformation, a lot of documentation, a lot of you know permissions and licensing is required. So therefore, it is that kind of a business. But there are certain areas which can actually play out in the near term as well. BEL is one stock that can actually play out because they are into the business of radar. They are into the business of fire extinguisher antennas, uh, smaller scale radars. They are useful for frigates in the Navy segment, for the land-based army, and for the air defense systems as well. So they get regular contracts ranging from 300 crores to even higher figures. And I think it has consolidated too very much at the higher levels, and a breakout and an up move is pretty much likely going forward in the next 2 to 3 quarters, considering the stock is at just about a 50 times to its price to earnings. It is evenly valued here. The government has clearly mentioned that most of the contracts will be going to the Indian domestic players. They will be focusing on Atmanirbhar Bharat only. Therefore, Bharat Electronics, being a government company, plays a vital role in it.
Fair point. I hope this has also given you enough and more insight as to how to approach the defense story. Lastly, I'm going to be focusing on the proxy play to the best and the winning asset classes of 2025, that's gold and silver. And how have you played up that on a proxy way is by either looking at the gold financing companies or by looking at the jewelry related stocks as well. Now, brokerage houses are yet again focusing on such companies again. Today we have a Nuvama report on Titan, which again has a buy rating on the stock, a target price of 4,672. They are talking about how the focus is now also going to increase on the lab grown diamonds going forward from here, and how the stock still has a lot of opportunity ahead too. Apart from this, there's also a Morgan Stanley report on Muthoot Finance with a overweight rating, a target price of 4,385. In the bull case, they're talking about a target price that could hit 7,150 as well. In a bear case, however, they also believe there could be a downside of 2,835. They do believe the loan growth is seen at a 50% year on year in FY26. High gold prices have boosted the growth outlook for the company. So let's discuss about these two companies there. Titan, which operates Tanishq stores at the helm of jewelry related purchases, and Muthoot Finance, which is always focused on when gold related loans are disbursed. Gaurav, how would you look at this space? Do you also believe gold and silver to continue to outperform in New Year? And should one be looking at this proxy play?
Firstly, when we're talking about gold and silver, the outperformance of silver will actually, I'm pretty much certain on that front, will actually continue for 2026 as well. Therefore, any decline can be utilized as an accumulation opportunity even at these levels. Now, when we specifically talk about the jewelry space and how they culminate into equities, how can we benefit from it? What I have personally noticed that especially the brand stores have also started shifting to lower grade jewelry of 18 and even 14 carat now. This is due to the high mounting prices of gold, and it has become really
Right.
a lot expensive and out of reach for most of the middle class people. Apart from this,
Absolutely.
what we have noticed is gold is also now being used as an accessory, especially by the young age working women. So when we speak about accessories, we are not talking about one or two sets. We are talking about multiple of those. When you need to buy multiple of those, the price component needs to be comfortable enough. Therefore, the 14 carat, the 18 carat plays a vital role in it. And I think carat lane is one sweet spot which has played a vital part in it. Look at the price point and the valuation from which Tanishq has acquired a carat lane and what it has posted today. I think going forward in the next 5 years, this will be a huge sweet spot. That is why we are seeing a huge number of separate carat lane stores being opened and alongside Bluestone as well. Although it is not a listed entity, so let's stick to carat lane now. So that's actually the adding up to the value of Tanishq. Apart from this, it is a very sweet spot for the gold financing firms also now. Firstly, if I had 10 grand gold earlier, I would, be able to get it at somewhat around 1 lakh rupees and give a 20%.
Okay, I think Gaurav, we are facing some technical troubles right now. We will have to cut short on this answer here and we'll have to wrap up the show right here. Many thanks for being with us and of course explaining a wide variety of opportunities to our viewers for the new year. Alright viewers, we'll wrap it up on What's Hot right here. Stay tuned on Business Today, much more coming up on your screens. Markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth creating ideas